Hello and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. Look, this is a quick little video preview for the webinar, which is going to happen in a few moments. So stay tuned. Hopefully you'll enjoy the session. We're going to talk markets. We're going to wrap up the week. It has been quite a volatile one. So look, about all this and a little bit more in the session right now. Stay tuned. Hopefully you'll enjoy it, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. Good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen, the 23rd of January, 2026. Look, I hope you're all having a wonderful Friday so far. I hope the week has been good to you, because again, it has been quite a volatile one. We'll look into all of that, but before we go any further, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. The material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. In the meantime, actually, I'm going to put my usual good morning in the chat room. Good morning, everyone. Good morning, everyone. There we go. Yep. So yeah, like I said, it has been quite a crazy week geopolitically. I talked about this on Monday. I said that, look, prepare yourselves for kind of a very geopolitical week, because again, we had a few pieces of information, of data, but it seems like nobody cares. Nobody cares. Everybody just cares, what's going to happen with this part of land, that part of land. So yeah. Anyway, going further, before we go any further, just a quick mentioning of our Markets.com website, yeah, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Also, I keep on saying, ladies and gentlemen, that this live session is meant for interaction, because it's a live one. So you can, always drop a comment into the box if you wish. If you don't wish to drop a comment into the box, then hey, just sit back, relax, and enjoy the stream. Ladies and gentlemen, let's have a look at the economic calendar very quickly. So this morning we had some important data, actually. Let me just kind of pick up on that. So this morning we had inflation numbers from Japan. First of all, let's start off with that one. Lower numbers. Look at this. The core year-on-year inflation number 2.4 as expected, and the previous one was a 3. Wow, that's like spectacular. 2.1 the headline. The previous one was at 2.9. But probably the whole attention was on the BOJ interest rate decision, where the bank kept the interest rate the same as promised. No excitement there, but in general, I think everybody was like the markets were very carefully watching. I think the West is really watching the speech. Was watching the speech of the governor of the Bank of Japan. But look, what's interesting there is that we know that the bank will continue hiking, right? And I think that yes, for now they're not going to do anything. However, going further, I think maybe before the Federal Reserve Chair Jerome Powell steps down in April, I think before that we should be seeing some sort of like a hike. So the next meeting, the next interest rate decision will be in March, on the 19th of March. At the moment, we don't have a forecast. However, like I said, it's going to be quite an event, I think. Again, that if the bank suddenly decides to go for that hike, well, I think, like I said, that's why I was saying, like initially, that the West needs to be monitoring that very carefully, because look, the whole point is the carry trade, right? Everybody's focused on the fact that, if the Bank of Japan is going to hike rates, then the money might stay more in Japan rather than go abroad, because this is kind of the whole point in a way, right? Of trying to protect your economy, which is fine from the Japanese side, which is not fine from the Western side. Why? Because we know that, given that the whole low interest rate environment that Japan has been enjoying. And by the way, let me just show you um, a chart here very quickly. Let me just put it on this way. This way, yep, there we go. So you can see that this low interest rate environment has been for quite a long time, ladies and gentlemen. Look at this. Look at this. We have been like at at zero, -1 here for some time now, right? And it was from 2016 all the way to 2024. And since 2024, we started seeing major hikes here. Well, sorry, major hikes. Just random. Oh, I'm sorry. Again, right. Just normal gradual hikes to the upside. Of course, like I said, this is all about protectionism and everything. Yeah, this is trying to slowly phase out the whole, the whole carry trade moment, so that, like I said, so that the funds would stay inside the country. For quite a long time, as you can see here, for example, here since 2000, when the rates dropped to zero. There was a moment where the rates rose to plus 0.5, but that was like a very kind of short-term period. That was like, this is the financial crash, if you remember. And then it stabilized. I do believe that the Bank of Japan might stabilize the rates again if the financial markets start experiencing some sort of like a downturn moment. But again, that's just a theory. So for now, we're seeing the pattern. I think that it could still go to that 1%. But as we know, such a move tends to be quite devastating for the global economy. Just like I said, just purely because of the funds are getting invested from Japan into other Western economies, and then when Japan starts pulling out that money, the Western economies cannot really deal with that. So if somebody's going to tell me that the Western economies are very resilient or something like that, no, they're very fragile. They're also, especially the U.S., for example. Japan is the one of the biggest debt holders of the U.S. debt. And also, if Europe starts to pull out, yes, they say, oh, it's minor, minor. Look, you add on, you do all these add-ons, and eventually, it hurts. So that's what I'm saying. So I think that in the U.S. they're monitoring very carefully the whole Japan issue, and I think, like I said, that's why this morning, if you look at some news outlets, everybody's all over the place, all over Bank of Japan. Everybody's all over, because they all understand. So you're giving so much attention to the Bank of Japan, and still saying, "Oh no, we're resilient, we're okay, we're okay." No, you're not okay. You fear that, and it's because, yes, you might say that it's a small component somehow. I don't know how you would say that it's a small component of everything, but it still matters. It's still, if somebody will start pulling money out of you, and your whole economy is based on like credit, and like you. Anyway, ladies and gentlemen, so yeah, so this is what we got from the BOJ today. There was a speech as well, the press conference with Governor Ueda. Look, in general, I think that the path is this, that they will continue hiking. Certainly not straight away, because they need to go this way gradually. But yeah, for now, it's this is what we're watching. Like I said, this moment here back in 2007, 2008. Yeah, this is like, you can see what happened then. Also, when the rates were around this level, we also had another financial crash just before 2000. So then, yes, there was the 2000 dot-com bubble as well. Also, there we go, a little crash. So I don't want to say anything else, but ladies and gentlemen, honestly, like, uh, just be cautious, okay? Be cautious, because this is, like I said, this is just we keep on repeating patterns, right? I mean, we're humans. We try to be smart, but we're actually sometimes a little bit lagging behind. Anyway, so let's take a look. What else happened? Oh, by the way, yesterday we had the PCs. The market did react a little bit, but kind of on the vague side, because again, it seems like nobody cares about the data, apart from if it's the BOJ, but at the moment. But the PCE came out 2.8 against the previous 2.7. Look, the problem with the PCE, that why nobody really made a huge fuss about it, just because the numbers were October and November. This is when the government was in shutdown, and we know that the figures could be a little bit on the skewed side. So, as I talked about this previously in my previous sessions, that for the BLS, the Bureau of Labor and Statistics, the U.S. of course, it will take some time. It will take some time to kind of get that credibility again, because we know that the way the data is collected is like a little bit all over the place, and yeah, so they need to build up that reputation again. So at the moment, in my opinion, ADP is the go-to number to check the real situation with what's happening in the market. Okay, so yeah, this is what was yesterday, but today, what else? What else do we have today? Germany. Okay, the preliminary composite manufacturing and services PMIs are coming out. The same story with the Eurozone overall, UK as well. S&P Global preliminary composite manufacturing and services PMIs are coming out. Canada retail sales figures, yep, and the US again, also the preliminary composite and manufacturing services PMIs are coming out from the S&P Global, so we'll keep an eye on that. Michigan consumer sentiment also, so a bit of data here and there, but I think that the market will be digesting the news with the Japan with the BOJ and what's happening. Today is, I think, the last day of Davos, so this World Economic Forum has been very, very. Again, I mean, you're gonna be probably tired of me using the word interesting, but certainly yes, it has been an interesting one, because look, there was so many things said that make sense, do not make sense. There was a lot of bravado. There was a lot of show. Certain deals, the signings of some sort of, like, deals and everything. All this was kind of like a really, really good, like, show, right? Don't get me wrong. From the entertainment side, it was fine. From the logical side, it was a little bit, like I said, all over the place. Anyway, but it's coming to an end. We're gonna go back into monitoring data, and look. Next week we're gonna have some important information as well. We're on Wednesday. We're gonna get the BOC interest rate decision, the Bank of Canada interest rate decision, and we're gonna also get the. Let me just double check. Where's that BOC interest rate decision? There we go. And we're gonna get the Fed. We're gonna get the Fed. In terms of the Fed, let me just update this very quickly. The Fed Watch tool. Let's have a look. What's happening here? There we go. Of course, I did not expect anything else apart from number remaining above 90%, the probability of remaining above 90% that there is not going to be any action taken by the Fed during this meeting. Of course, there's one person in the White House administration which is not very happy about it, but I think that my opinion again. looking at this April here. By April, we're not expecting any rate cuts. So we were expecting one before, but now we're not because, well, if you subpoena somebody, um, it becomes, it's like initially I was willing to give you that rate cut just like, just as a gesture of goodwill before I leave. Now, given that you attacked me, should I give you that? No. So that's the thing. That's the kind of the morale, which is logical. Come on, like, I mean, this is like not rocket science in a way. So look, unless something will change drastically, but yeah, I don't think that I don't think that Jerome Powell will give now any like rate cuts until he leaves, and he leaves in May. So yeah, it's I think it before the attacks, we were actually expecting one rate cut before, in April, like at least in April. Now we don't, which is, like I said, logical, because again, you attack then, and then you attack me, and then you expect me to obey, kind of. So no, of course that's not going to be the case. Anyway, certainly, don't get me wrong. This whole telenovela will be very interesting. Further episodes are going to be very interesting to watch going further up until April at least. But for now, like I said, this is my case, and I do believe that there's nothing's gonna happen with the Federal Reserve. Anyway, look, let's take a look at what's happening with the markets in a way. Let's take a look at what at the indices here, ladies and gentlemen. Nikkei did recover. Look, initially we were selling off, right? I mean, from Monday we were seeing this move lower because everybody was talking about how the U.S. is planning to take Iceland. There we go, Greenland. But yeah. We know that the speech was full of that. They were planning to take Greenland. They are still planning to do so, but apparently the European Union kind of is agreeing on the fact that they want to maybe kind of lease it out, something like that, or to kind of give it into full use, but the sovereignty would be still Greenland would remain sovereign, and I don't know how this is gonna work because in practice, because if you're gonna you're gonna be putting your flags on, you're gonna be building up areas, and you need permissions for that. So, and then suddenly you're gonna say no, guys. I mean, so again, it's a very itchy subject. I mean, you're gonna like I said, you're gonna, one country comes in and says we want to, we want to take over your country and we want to control your country. So if somebody else does it, that's wrong. That's called invasion. That's called, But if they do it, that's fine. Okay, the world works this way, apparently. So the hypocrisy is just like at the highest level right now. But anyway, looking at the indices here, ladies and gentlemen, looking at the technical picture on Nikkei, look, we're very close to the all-time high. I think there could be some more upside given the fact that the tone around Greenland has kind of went down a little bit. So, and another thing is that because we're not seeing the rate hikes by the BOJ yet, so maybe Nikkei could enjoy the moment here and just still push a little bit further north. Now look, for now like I said, we're watching this barrier here from the technical side, 54,000 and a half territory. I'm watching this. If we get a nice clearance, then yes, a forthcoming higher high will be confirmed. For now, I will kind of take a little bit of a neutral stand on this one and just wait for the next big move. Shanghai Composite, beautiful reversal from that 23.6 on the Fibonacci retracement. However, am I getting bullish right now? No, because I need to see a push above the above the highest point, the current highest point of January, the current highest point of 2026. If we can get that move above the 4,190 zone, then yeah, 91-ish, then yeah, I'll go further to the upside. Okay, so Dow Jones Industrial Average, ladies and gentlemen. Yesterday, good result here. Look, I talked about this, and I talked about this little box here, that if we do continue to trade within it, and yes, we had a violation of on the lower side here, but if we look at the weekly, you'll just see a nice little false breakout. So, what it means that maybe, like I said, what I said that previously, that if we do push back above the 49,000 territory, I think that it could open the door to some higher levels. There we go, mission accomplished. We had a nice move here. And if we do push above that 49,633, ladies and gentlemen, welcome to uncharted territory and the new potential target, which is the psychological 50,000. I think it's doable. I think it's doable. Look, I talked about this. I said that the 50,000, I think it needs to hit that. It just cannot sell off without hitting the 50,000 first. Will it surpass that? I most likely. If it hits, I think with the Dow, I think if it hits the 50, it might surpass it a little bit. Not by much. Maybe just like, go a little bit higher, and then then sell off. So long story short, for now, we're just watching this very carefully. I think, like I said, I am still aiming higher. I'm still aiming for that 50,000, but I ideally, I would prefer to wait for a push above the 49,633 territory right here, and then we'll take it from there. The S&P 500. So yeah, also good result here. Yesterday, as always, somewhere in between the Dow and the Nasdaq. But okay, this time actually Dow and Nasdaq were the gainers. This is one of those rare occasions when you see S&P actually being the bigger loser. So normally it's like either Dow or Nasdaq takes the crown for the day. Then one of them is the biggest loser, and then the S&P is kind of somewhere in the middle. This time is the other way around. It's like I said, the S&P is the bigger loser. Well, still okay, doing good, but less gains than the Dow and Nasdaq. But long story short, look, I mean, for now, I think that the beautiful move back above the 50-day EMA, shown as the green line here, worked out nicely. But certainly, if we do push and stay, and this is what I said to you, if we do push and stay back above the above the 6,900 zone, then well, there is a good chance of a further move north. Nasdaq, very quickly again, I talked about this. I said to you, look, keep your eyes on this highlighted zone. The weekly chart is the one that kind of shows the better picture here, in my opinion. So we pushed back above the 25,435 territory right here. I talked about this on Monday and Wednesday, and there we go. Great result here. Great move. Great move to the upside, so kind of leaning a little bit more towards the upside. DAX. Okay, DAX, I talked about this, and I said to you, look, I'm gonna watch this little area. For now, we're just flirting with these two hurdles. Now, we had a great rebound, and look at these gaps, just crazy gaps. You can decide about the week. You can judge by the week, judge of the week by these gaps that we're seeing in some indices here, and yeah, DAX is just all over. For now, I will say this way: while we remain in this little territory here between the 24,758 and 24,911, I will remain somewhat on the neutral side. I need to see a clearance through one of these levels before kind of considering the next short-term directional move. The FTSE 100 also climbing back up here, climbing back above the 10,158 zone. And hey, I would say this way, that if you're looking for some higher levels, I would say wait for clearance of the current all-time high. That's, I think, the simple way of approaching this one. DXY, ladies and gentlemen, DXY. This one's feeling the heat. Of course, we understand why, because again, the whole talk about Greenland, everything, everybody has kind of got fearful. Normally, DXY should be a safe haven, but I think is this time it was more of like show your dislike of the U.S. And this is what investors did, and there we go. We saw dollar kind of decline quite significantly. That said, are we bearish or bullish? Not in, let's say, in the medium term. No, because we're neither. Because what I'm doing here, I'm waiting to see a clearance through one of these sides of the range here. Because at the moment we're stuck in this very wide range, which is kind of roughly between the 96.2 and the 96. Sorry, 96, 100.5 ish, roughly. So we're stuck in this little territory, kind of little, and in a way there could be some interesting developments later on, but in the short run, well, look, we fell below this 98.76 territory. I talked about it, and I said that my next target will be this 97.87. Well, to be honest, this is what I'm going to still stick to. I want to check out VIX. Yep, there we go. Up until Tuesday, we had a very great volatility. Then the speech did tone it down and put volatility back in its order. I think that yes, we could see some calmness for now, but certainly if it pushes back above the 18.10 zone on the volatility index here, yeah, I think another push higher here could be possible. Anyway, ladies and gentlemen, let's jump into the Forex world. AUDUSD, boom, there we go. My mission has been accomplished because what I was aiming for, that's right, I was aiming for this little hurdle, the 0.6857 zone. I talked about it, and there we go, mission accomplished in a way, because I said if we do break above the 0.6766, my next target is the 0.6857. There we go. Boom. That is the inside swing low of the 1st of October. And yeah, it's a good result here. Now let's chill, I would say. Let's keep an eye on the situation. I think that maybe a little bit of a retracement back down could be possible. However, if you're looking for some higher levels, well, then wait for at least a break above the 0.6857. If that's going to happen, my next target is the highest point of 2024 near the 0.6937, and then we'll just take it from there. AUDJPY, there we go, boom, to the upside. Of course, weakness of the Japanese yen. We don't have a rate hike. So what's interesting here is that I talked about this, and I said to you, if you remember in the beginning of this week, I said, look, keep your eyes on the 106.71. If that gets cleared, my next target is the highest point of 2024. There we go, 109.37. And we kind of reached that. I would actually say that this is already an achievement. This is a good result. Yes, it's never the exact level, but let's not be too greedy, okay? If you manage to exit here somewhere, absolutely great result. Look, it might go back up again, don't get me wrong, but for now, I think this was, like I said, this was a great achievement here. Let's see what's going to happen next. But for next, I need to see a push above the 109.37, and then we'll just take it from there. For the downside, my preference here, of course, is to wait for a break of this upside line and maybe also a push below the 106.71 here, and then we'll just take it from there. Ladies and gentlemen, let's jump into EURUSD. Okay, look, beautiful rebound from this broken downside line, and so far I'm going to stick to the upside. I'm going to stick to that 1.1810 as my next target. I think that's a good one. Let's see what's going to happen here. For the downside, well, the preference here would be to wait for a break back below this downside line. And this way, yes, more sellers here could join in. EUROJPY is at an interesting spot, and we cleared the upper side of this this box. I talked about it. I talked about this 185.57. There we go. Boom. What's next? Look, if as long as we stay above it, then yeah, my next target is the 188.22, and then we'll just take it from there. Let's jump into actually Euro GBP, one of my unfavored pairs, but I still look at it. There we go, still within the falling channel. We're testing the upper side of it. So if you're looking for some higher levels, then yeah, we'll keep an eye on the upper side of this falling channel, because we had a few clearances. However, we struggled to remain above it. So long story short, for now, I will continue targeting the downside while we remain inside the pattern. If we break the upper side of the pattern, yes, the game plan changes and we could go for the upside. Let's talk about GBPUSD, ladies and gentlemen. Boom, look at this beautiful move yesterday to the upside. Tested the 1.35 territory, and yep, it slowed down. So in general, GBPUSD does like, also like USDCAD basically, does like these nice beautiful numbers. So 1.35, there we go. It's a nice, beautiful number. It tested it. It found resistance. Now we're seeing a nice retracement back down. However, I think that the upside, we're not really done with the upside. As long as we stay above the 20-day SMA within my Bollinger Bands here, and yeah, on this daily chart, and then yeah, I'll go further north. Quick glance at the GBPJPY, also similar, but okay, okay. With this one, the problem is that this hurdle, this 213.88, is providing resistance. Now I talked about these levels here, the 213.88, 215.88. So these two levels are have been the highs of the financial, during the 2008 market crash, and we've reached that level here, and yeah, we then sold off. So basically, okay, we started selling off earlier. We started selling off in 2007 because the market, I think, already started jumping into the yen. I think the first alerts were coming through. And for now, we're not seeing those alerts. We think that there could be some more upside on this one, judging by this. But we need to overcome the. Just bear with me one moment, ladies and gentlemen. Just bear with me one moment. Apologies for a little pause here, but again, it's things happen. Ladies and gentlemen, look, but like I said, coming back to the situation here with the GBP JPY, the story here goes that I think, yeah, further upside could still be possible, unless we see markets selling off, and the BOJ kind of going for like rate hikes a little bit earlier. But something tells me that that's not going to happen yet. That's why I think GBP JPY still has some room for some more upside. Look, for me, I think the option here to consider the downside would be if we do break this upside line here, taken from the low, the 24th of December, and if that gets cleared, yes, I think it opens the doors to some lower areas. Let's jump into USD/CAD very quickly. So look, I talked about this yesterday on Wednesday, but I have this little kind of medium-term upside support line, which, don't get me wrong, is a little bit on the tentative side, because we have a violation right here, but I do like it still, and I think, look, if we continue to trade above it, there is a chance of a rebound. Although, the pair is showing willingness to go lower, but for just extra confirmation, a break of this upside line would be required. If we can get that break, I will go lower. But at this point, I think there is a chance for a rebound. Let's keep an eye on this one. USDJPY, yep. Now this one's interesting. Now look at this activity here. Now, judging by the candles, the candle formations here, This looks a little bit on the bearish side, but a confirmation break at least below the 157.89 is required. If we get that move, um, if we get that move, then yes, great. More sellers here could join in. But at the moment, look, I would say let's keep an eye on this. Certainly, the upside scenario is not off the table. If we push through the 158.88 zone right here, which is, by the way, let me just show you what I'm talking about here. This is where we are right now. This is the 100. This is the highest point of January of 2025. Actually, this is the highest point of 2025 because we didn't reach in December. We didn't reach this high. So this is the highest point of 2025. So going back to this, if we do clear the highest point of 2025, I think yes, more buyers could join in. But again, right now, looking at this shape of the candle, this formation, it doesn't look very bullish to me. USDCHF, yep. Look, with this one, I'm just gonna say that given that we fell below all my, EMAs here, this upside line, I talked about this. I said that my next target is going to be somewhere around the 0.7850, maybe 0.7829, and in general, I'm quite bearish because look at this. Look at this. We are at a very key important area. If we clear this, this will confirm a forthcoming lower low, and it could open the door to these lows that we saw in 2015 and 2011. So keep that in mind. Let's jump into gold. Ladies and gentlemen. Okay, we're seeing a little bit of retracement this morning, but only after we hit a new all-time high. Yesterday we hit an all-time high. Today, look at this, 4,967. Did we get closer to 5,000? Look, in general, I talked about this in my videos here. Let me just show you what I'm talking about here. So, quick precious metal update. That was 3 days ago. Basically, I did this on Monday, and I talked about the 4,900. First of all, I said that this is going to be my next target. Not the 5,000, the 4,900. Why? Because we tend to do this little thing here, and the markets tend to do that. Whenever we see like a nice, beautiful, shiny number, we come very close to it, but we fail to hit it. Like for example, back in 2011, right? Everybody was talking about 2,000, but yeah, we hit the 1,920, 21-ish zone, and we sold off. And we sold off for quite a lot. Look, am I saying that we're going to sell off right now? I don't know yet because we need more confirmation. At the moment, we're not getting that confirmation, but I think that maybe it could stick around here at the tops near the 5,000 level. I think that maybe today we could hit that 5,000 level because, again, it's like always the case. If we're very close to it, then why not? Because what I'm waiting for, I want to see if silver is gonna act and go and hit that 100 or maybe even surpass the 100 level. So I think this is quite doable. But again, for now, let's go be very careful, cautious. And certainly, yes, keep an eye on that 100 level on silver. By the way, let me just jump into this one. There we go. We came very close. We came very, very close this morning on silver to hit that 100 level. 99.37. That's what we did. And okay, right now we're seeing a little bit of a retracement here. Let me just jump into now 1 hour chart here. There we go. We're seeing a little bit of a retracement, but that's fine. I think that, like I said, everybody is watching this very carefully today. The geopolitical threats have not diminished. They're still here. But what I'm watching really actually is this right here, gold silver ratio. Now we are gold is like 50 times more expensive than silver, right? But previously, at one point back in 2025, in the beginning of 2025, gold was 100 times more expensive than silver. So you can see how silver is picking up demand. And to be honest, I believe that there could be some more downside here. Look at this. I talked about it, and my target is somewhere around 41. So in a way, what could happen here is where's my calculator? If I am hoping to see, like I said, these areas here around 41, why is it not launching here? There we go. So basically, if I'm hoping to see, if I think that gold might go to 5,000, for example, right? And I do believe that maybe the 41 here on the gold silver ratio could be tested. So basically, for silver, that would need to be 121, 22 area that we would be examining, right? That said, I maybe it's not going to be. Maybe gold actually could surpass the 5,000 mark. So basically, for let's say gold could end up testing maybe the 5,100 area. That means that for silver, if at this level, to reach the 41 ratio, that would need to be 124. Look, long story short, for now, I would say, or maybe actually, you know what? It might not even be this way. Maybe it's gonna remain around 45, something like that. So basically, if I do this, and then divide by 45, then maybe it's gonna end up being just around 113, something like that. So in general, for silver, my opinion is the 110, 111. I think that this is quite doable for silver because let's face it. I was looking at this, and I'm the person who's going to be continuing to shout about this because this is insane. Look at this. Look at the parabolic move on silver. Look at this crazy move in silver. This will have to come down. What comes up must come down eventually. However, are we there yet? Are we ready to go lower? I think not, because I think that there's still, like I said, we still could end up hitting something like the 110, something. Well, on 100 level, I think that's for today. That's like something for today. We're already at 98. We at one point today we were at 99.37. So I think that it's doable today. So let's keep an eye on it. For gold, I think gold could stick around, like I said, around closer to 5. I think gold made a move. If let's say if gold remains around 5,000, then if I'm hoping to see, let's say, silver reaching around 110 eventually, then that's around 45 on the ratio. Okay, excuse me. So 45 here, somewhere here. Yep, could be doable. Let's see what's going to happen. Sorry for that. Some messages from within coming through. So we'll keep an eye on this. But like I said, I'm still kind of hoping to see actually a further decline here in this ratio, gold against silver. I think that it's doable. So let's see what's going to happen. But coming back to the commodities, going back into the daily chart. So gold is a little bit on a retracement, but I think, like I said, let's see if we can hit that 5,000. If silver is going to go for 100, I think gold could do a similar thing. Platinum, also beautiful move here to the upside. Look at this. Look at this move. Look, initially in the beginning of, or somewhere around mid-January, I was talking about this, and I said, look, we were hanging around this 2,400 zone. I said, we're very close to this 2,299. If we do drop back below it, then I'm going to consider it a little bit of a move lower. But now we cleared the 2,478. Hey, the sky's the limit. Are we going to go for that 3,000? I wouldn't be surprised, but only as long as we stay above the 2,000 you know, 2299 zone. Yeah, at the moment there's no like even sign of a reversal. So I would say just for those short sellers, you know, try to be a little bit more on the careful side. Palladium also pushing through that 38.2. I talked about it. And we're pushing through that 38.2. Okay, yeah, now my next target is the 2134, 35 zone-ish. That's around the 50% on the Fibonacci retracement. So yeah, let's keep an eye on this. And for now, this retracement, by the way, is drawn from the highest point of 2022 to the lowest point of 2024. Copper, also while I'm on the monthly chart. Now this one's still stuck. Now this is what's interesting to me. We are still stuck. We're still coiling up here. And it seems like we're waiting for some sort of a move here to happen. So, you know, gold and silver is not enough. I think something needs to drive copper here. Interesting. So yeah, long story short, we're just waiting for this one to kind of break out through here. WTI oil. This one cannot decide what it wants to do. It on one hand, you have your geopolitical issues, which could force oil to go higher. On the other hand, you know, you have the comments which kind of then stabilize the you know, the fears. It's like I said, it's a little bit of a tricky moment for oil. On one hand, like I said, it wants to go higher, but then on the other hand, it's stuck here. Look, in general, I will say the same thing what I said previously. I'm still bearish on oil, and because I don't think that this U.S. administration needs oil to be on the expensive side, so they will most likely do everything to drop oil, you know, lower back below the 60 and maybe even below 55. This is my kind of idea for now that oil could be dropped below 55. So yes, for now, like I said, it's this is my scenario. However, that said, from looking at just purely from the technical side, I have to admit that while we remain above the 58.88 zone right here, we could still see a push higher, especially if we also climb above the 100-day EMA shown as the blue line. Then my next target is the 200-day EMA, and then we'll go from there. Brent oil, similar story. We're stuck, but we're stuck above the $64 mark, so there is a chance of a further move north. Natural gas. This one's, I mean, honestly, look at this. Natural gas, it stabilized, don't get me wrong, but this is just a crazy move. Look, of course, bad weather, right? That's the main argument, and that's the main news around it. But something else is brewing here. But certainly, do I believe that it's going to go further north? I think not yet. I think that 5.5 barrier is the one to watch. If we clear it, then yeah, okay, we could see a further move north. But for now, I think the fact is that we're kind of hovering around the 4.9 zone here. If we somehow remain below that psychological 5 level, I think a little bit of a retracement back down could be possible. But my preference is a drop below the 4.59 zone. This way I could get a little bit more comfortable with some lower levels. Ladies and gentlemen, then to finalize this webinar, Bitcoin, basically the crypto world, right? So with the cryptos, it's a little bit tricky, I would say. We are kind of stuck in a way. On one hand, everything looks quite bearish, you know, but if everything looks that bearish, then why are we not seeing a major sell-off or something? Because normally the market does this, you know, like if everything is okay, then we gradually climb higher. Once everything is bad, then you just kind of boom, you know, to the downside, you sell off, and that's kind of it. So long story short, for now, although I can see some violations here, I can see some, you know, kind of scenarios of the down, you know, working out to the downside here. But I don't want to rush into things. I can see that we're hovering near this inside swing low of the 8th of January. And that's roughly around the 89.26, 89,260 zone. So if we somehow climb back above this and stay above this, then look, I don't see why we should be selling off. Bitcoin Cash, now this is a good one as well. Look at this. We had a drift lower. We broke the upside line. If we look at the weekly, we'll see a nice, beautiful false breakout. So keep your eyes on the weekly chart. And this upside line, of course, okay, don't get me wrong. We can say that it's a little bit on the tentative side, but still, yeah, it's kind of working. It's not really showing us anything wrong, so why not to stick to it for now? For now, at least. So long story short, I will consider the upside still if we continue to trade above this little upside line taken from the low of the 19th of November. Ripple. Now, Ripple loves the 1.1990 zone somehow. I don't know. It's like it just continues to hug it. It continues to, oscillate around it. And look, if we stay above this, then I think there is a chance of a push higher. In general, the psychological 2 level, that's the kind of the new norm, I think, for Ripple. Because if you remember a while ago, before the U.S. leader took presidency, and I remember here in November, before like the election, during the election when he won, it was just crazy. Cryptos were, to the moon, and everybody was like talking, wow, this is like going to be a game changer. Yes, in a way, the game changer kind of came. There was a Genius Act in place, and now they're trying to mess it up a little bit. But look, I think maybe they could remove it, and I think they all need crypto. I think for now they really, although everybody's talking about how more regulation and surveillance is needed on the cryptos, right? Because we're kind of in a way eventually killing off the essence of the cryptos. But at this point, for now, I think they still need it to be, what it is right now, right? And yeah, I don't think that this is gonna should sell off like crazy or something. But of course, anything can happen. But for now, I think that we could see another boost here to the upside at some point. But look, for that, I would need to see this one staying above the 1.1990 zone at least, and that's I'm talking about a Ripple. Ethereum, okay, looks bearish. To be honest, don't get me wrong, this looks bearish. This formation here, so hey, this looks a little bit, like I said, to the downside, so maybe it could drag a little bit lower some other cryptos. Anyway, like I said, I'm not gonna rush, but you know what the interesting thing is that lately nowadays kind of I'm seeing that not all cryptos are moving in the same direction, because I think, and I've floated this idea in my previous sessions, that I think cryptos, the top ones, the popular ones, will become more like your traditional asset classes. And I think that some will be categorized as commodities, some will be categorized as currencies, somebody maybe will become like more of a stock or something, like and this is how they're going to move. And that's why maybe we're seeing this we're seeing these differences in movement with some cryptos. So we'll see, and other cryptos will probably die out. So yeah, we'll see. Ethereum Classic near key area of support near this 11.31 zone. So let's see if we can clear that. If we cannot, then yeah, there's an opportunity here for the bulls. Litecoin, my beloved Litecoin. I like this one actually. It's trying. Look, if it's trying to push back above it, back above this 69.65 level. It's a good area. Look at this, how well it's playing out. It was previously a good area of support. Now it's a good area of resistance. So if we clear this, then yeah, I'm gonna go a little bit to the upside. Dogecoin. Now Dogecoin is where we need to see what Mr. Musk is doing in general. Like I think this is just reacting to it's his coin. Let's put it this way. The Musk coin. Yeah. So for now, it's not doing much because I think he just abandoned it. But keep your eyes on like I said, some key areas of support here. The 0.12 territory, we're watching this one. If we get a clearance of that, then yes, further downside is possible. Polkadot. Okay, look, Polkadot is an interesting one. It's below the psychological 2 level, but it's not really moving further south. So either it's going to be like a little temporary drop here below 2 on the weekly chart, or actually we're preparing ourselves for a further decline. So this is, like I said, this is the I would say this way: keep your eyes until the end of this week, and not, not only today, until the end of this week. Keep your eyes on the on Polkadot. If it continues to trade below 2, maybe a little bit more downside we could see on this one. So just, yeah, keep that in mind. And finally, Tron. Tron is, now I said before, this one behaves like a currency pair, and we're seeing a nice reversal here. That's fine. A reversal from these EMAs. Now, I hope that this is going to be a signal for more upside. Let me get rid of this upside line. So I hope we're going to see some more upside on this one. If not, if you're really on the skeptical side, with the upside, then yeah, sure. Look, it's fine. I can relate to your skepticism a little bit. But if we push above the 0.3208 zone, somewhere around here, which is the current highest point of January, then will confirm a forthcoming higher high and open the door to some higher levels. Very simple. So for now, long story short, keeping an eye on this. If I'm looking for some lower levels, then I need to see a break not only below this upside line, but also a drop below the 0.2947, and then we'll just take it from there. Ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. I hope you found it useful. Thank you. As always, ladies and gentlemen, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. And I shall see you on Monday. That's right. Monday, as always, the same time, same place, different place actually. Thank you very much, ladies and gentlemen. Have a beautiful weekend. Bye bye.